Let's be honest. In the nanny world, being paid under the table is actually a huge open secret. It is tempting, right? You get to take home every single penny that you work for. No paperwork, no taxes being taken out of your paycheck, and both sides feel like they're coming out ahead. But as we move into 2026, the IRS has made it clearer than ever that cash only is no longer a shortcut. It is a high-stake gamble. I'm going to walk you through why paying your nanny under the table is actually one of the riskiest financial moves that your family can make. We're going to talk about the literal cost of getting caught, the unemployment trap that catches most families, and why being off the book actually costs you more in the long run. If you've been paying your nanny cash and you're feeling a little nervous, stay with me. I'm going to show you how to fix it without losing your mind. Okay, first, let's define what the IRS actually requires. For 2026, the nanny tax threshold has officially moved to $3,000 per year. That means if you pay any household employee such as a nanny, a housekeeper, or even a private chef more than $3,000 in a calendar year, you're legally an employer, period. It doesn't matter if you call them a contractor or if you only use them part-time. If they hit that $3,000 mark, the IRS is expecting you to file a Schedule H with your personal tax return. Now, a lot of families think, the IRS is too busy for little old me. But here's the thing. Most people do not get caught because of an audit. They get caught because of something called a signal event. A signal event, for example, is when your nanny goes to the doctor and she says that she has been hurt at work. Or, in most cases, when the job ends and the nanny goes to the unemployment office, when they file for benefits and list you as their last employer, but yet the state has zero records of you paying into the system, that is an automatic giant red flag that triggers an investigation. So, what happens if the IRS comes knocking? It is not just a simple slap on the wrist. You are looking at a triple threat of financial pain. 1. Back taxes. You'll have to pay your share of Social Security and Medicare, which is 7.65%. But guess what? You'll end up paying the nanny share too, because the IRS is not going to go chasing after them. They're coming after, say it with me, you. They're coming after you. Secondly, interest and fines. The IRS charges interest from the day the taxes were originally due. Add that to failure to file and failure to pay penalties, which can quickly add up to 50% of the original tax amount. Thirdly, unemployment and workers' comp. If your nanny gets hurt or laid off and you didn't have the proper insurance because you were off the books, you are personally liable for their medical bills and their lost wages. We're talking potentially tens of thousands of dollars. For many professionals, especially doctors, lawyers, or anyone with a professional license, a tax fraud or a tax evasion charge is a career killer. Now, this is the most common mistake I see. Families who think that they're being legal by giving their nannies a 1099 at the end of the year. I want to be very clear. Nannies are almost never independent contractors. In the eyes of the IRS, if you control when they show up, how they feed your kids, and how they do their job, they are an employee. Giving a nanny a 1099 is actually worse than paying cash in some ways, because you are literally handing the IRS a signed confession that you misclassified an employee. When the nanny files their taxes and realizes that they have to pay the full 15.3% of self-employment tax because you didn't pay your share, they are going to report you. And the IRS will win that battle every single time, maybe every single time. Transitioning to a W-2 is the only way to truly be safe. Now, if you've been paying cash and you're realizing that it's time to go legal, don't panic. You don't have to go to jail. The best way to fix this is to start fresh at the beginning of the next quarter. Sit down with your nanny and have a professional reset conversation. Frame it as being a benefit for them. Tell them, hey, I want to make sure that you have income that can be verified so that you can rent an apartment or buy a car. I also want to make sure that you're building your Social Security credit. Most nannies, once they understand that paying legally gives them a safety net, are going to be totally on board. You can use a payroll service like Popping Payrolls or HomePay to automate the whole thing. They handle the tax filings, the withholdings, and the direct deposit so that you don't have to become an accountant overnight. It's basically an insurance policy for your peace of mind. At the end of the day, paying your nanny legally is part of being a high-level employer. It protects your family, it protects your career, and of course, you treat your nanny like the professional that they are. When you factor in the child and dependent care tax credit that we talked about in the last video, the actual cost of paying taxes is usually so much lower than you think. You're only paying a few extra $100 a year to avoid paying a $50,000 risk. If you're ready to make the switch, but you're not sure how to start that conversation, check out my video on how to talk to your nanny about taxes. It'll give you the exact script to use. Don't wait for a signal event to happen to you. Get ahead of it now. And I'll see you in the next video. Bye guys.